my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A reactionary bullish long white Mariposa yesterday as the market continued its stabilization and pull back up from breaking the recent mid-February to end of March bearish Andrews pitchfork, which is now retired. What was interesting and surprising also was how the cap on the market yesterday was the middle sign, currently 107.08, of the well-highlighted January to May 2021 bearish Andrews pitchfork. This pitchfork continues to direct and show the overall bearish angle of attack of this market, as it has done now for over a year. Looking just above the middle time, we have the April 2020 low at 107.25 and the May 2020 low at 107.66, but the better resistance starts from the declining short medium moving average, currently 107.80, and carries on higher. Meanwhile, below, we have support from the 2020 low at 106.35, but the better support starts from the April 2017 low at 105.68 and extends lower. So far today, well, a move lower from the open, but it was very limited, and prices soon have come back to where we finished last night and then moved higher over the declining middle time and the April 2020 low at 106.35, though since pulling back a little bit though. Cable, aka sterling against the US dollar. A third bullish white soldier says the market broke up and out of the congestion zone between 124.78 to 125.09. That contains within it the 38.2% Fibonacci line of the March 2020 to June 2021 move at 124.89. This zone is now support. This move up was as a result of the recent 3-day bullish stick sandwich pattern seen last week. We're now in a fairly free area with only the high from 3 weeks ago in the 126.35 area as any form of resistance until the September 2020 low at 126.72. So far today, an initial dip lower, but not by much, and a recovery to unchanged. Just about. However, there's been no serious attempt higher as yet. Euro sterling. A very interesting combined immediate countering key reversal up and bullish double pattern yesterday. This was a strong move higher, as during the course of the session prices dipped down below the long moving average, currently at 84.43, and once again not managing to reach the upper trend line, currently 84.21, of the smaller but seemingly more robust lopsided diamond pattern. The market then volt-faced and propelling itself higher back up through the long moving average and the April 2021 low at 84.70, and finally through the broken September 2021 to date downtrend, currently 84.71. That makes up the upper trend line of the extended diamond pattern, and up to new highs that have not been seen since the start of last week. This may very well be a seminal moment for this pair, but only time will tell. Just in case, on the upside we have for the smaller lopsided diamond pattern a primary target X in the 86.80 area and a harder secondary target X1 in the 87.65 area. For the extended diamond pattern, we have a primary target X2 in the 87.15 area and a harder secondary target X3 in the 88 even area. Additionally, there is one final pattern, and it is a big one, on which the market has also previously sent mixed messages as to whether it was a false break or a real move. You see, I've spoken now for countless days, weeks and months even, of the very large falling wedge pattern, currently 84.71 to 81.64, which was still in operation, but which had fallen into the shadows a little. And that's with the rising prominence of the diamond patterns. This pattern had been triggered, but has left us with questions. You see, it has the most ambitious target of all of them on the upside. Target X5 for this pattern is in the 88.65 area, and that is a big ask. So far today, well, a dip back towards the upper trend line of the extended diamond pattern, but turning back up before reaching it. Prices have moved higher up towards and over last week's highs at 85.33. We're now maybe looking up to the 86.20 area, which is the high from 2 weeks ago as a potential topside resistance. US dollar against the Indian rupee. A simpler pattern yesterday than some recent days, but it still doesn't answer many questions. It's a fourth countering bearish army as the market continues to morph this recent bearish stick sandwich between 77.40 to 77.80 into a congestion area. Overall, prices are still in between the lower time below, currently 76.96, and the middle time above, currently 78.42 of the mid-January to early April bullish Andrews pitchfork. We still have overhead target X in the 78.30 area. This is the potential target for the whole of the 2022 action, being a possible bullish halfway hesitation. In between there and here, we have the previously mentioned middle time, also the upper trend line, currently at 78.23 of the late August to date ascending, expanding wedge pattern. So far today, a slightly lower open and a reactionary move higher, moving up towards being a bullish double right now. US dollar against the Brazilian real. A second consecutive bearish opening black Mariposa yesterday, and a third if you were to count last Thursday's hammer pattern as one. This time prices followed on from Friday's close below the combination of the 2021 low and the declining short medium moving average, currently 487.98, and the opened underneath it, punching down through both the 50% Fibonacci line of the June 2019 to May 2020 move at 484.26 and the June 2020 low at 481.62. The fall finally halted as at the 50% Fibonacci of the October 2018 to May 2020 move at 477.54. Prices pulled back up a little to just underneath the June 2020 low. Looking further below, we have limited support until the congestion in the 472.90 area, with little more support at 471.42. However, overall, we're in between the upper time, currently 512.10, and the middle time, currently 466 even, of the start of 2022 to date bearish Andrews pitchfork, and seemingly moving towards the middle time right now. This is an early bearish pitchfork, but it may have some merit, and because though it's not been tested, it has been some merit forming in the recent bearish angle of attack of the market. So just keep a close eye on that one. US dollar against the Mexican peso. A lower but still indecisive doji cross yesterday. This may well have been the final part of the follow-on lower to the recent immediate countering bearish engulfing pattern. The recent top of the market is still defined by the lower trend line, the uptrend if you will, of the June to October 2021 descending triangle pattern, currently at 20.0595. Whilst the base has the attrition evidenced by the market moving down through the late March and April base double bottom congestion between about 2010 even down to 1971.68. I have recently asked the question, is the mid-April to date action a possible cat's ears pattern? Well, I think that this has merit, and I'm minded to place a let's say conservative target X below, though the move down, should it happen, will probably extend that further, as it is a bit of a lopsided pattern. And I have used the minimum size movement possible for this, thus target X is in the 1954 even area. So far today, well, a test higher, though not by much, and interestingly still within Friday's main range. Well, just about. It is looking indecisive right now. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.